welcome you again. If you are just joining us for the first time, of course, this is the first video you're watching, or this is the first video you're coming across in our channel. Please do well to watch the other series, because it's going to help you to actually understand what we are trying to do here. In this class, we are going to build the capex, that is the asset schedule. That's what we're going to be building. We're going to see how to calculate our depreciation, and also how to integrate that into our model. And again, don't forget to like and subscribe to this YouTube channel. Thank you. In the previous session, what we did is we were able to calculate our retained earnings. That's if there is profit. Of course, if there's no profit, we see that we have nothing. And in this session, like I say, we're going to be focusing on the business assets. So now we're going to now link our assets. We're going to say, go to put your equal to sign, go to your inputs, come to use of fund. So you click this, enter. Now, because we already have consistency there, we just click and drag, submit, click and drag further. Of course, it's going to give you nothing. So we have nothing there. So our total asset is this. This is a link cell. This is a link cell. This is a link cell. So when you link it, now this is where we're going to do the most work. Remember that our opening balance is the closing balance in the previous year. So we're going to say equals to the closing balance, as the ending balance. Now, do we have new capex? Of course, we do have new capex, right? We do have new capex. Before we integrate that new capex, let's see what we have here. Now, if you look at here, with the depreciation schedule we have here is called waterfall depreciation schedule. This is waterfall depreciation schedule. You can see it's going from here, slanting down till it got to this very point. Right now, what we are going to do first of all is also link our new asset. Now, the way we are going to do it is we're going to say, okay, now what is our asset? Oh, there is something we forgot to put. We're supposed to link. It's very, very important, because it's going to help us. First, we're going to link the total assets, the total value of the asset here, right? Then we're going to link our asset maintenance ratio. So we can call it ratio, asset maintenance ratio. So we are going to go down, because we have made the assumption that our asset on the first year, we are not going to do any repairs on our asset, because it will be 100% fully functional. But in the second year, we are going to do some little maintenance on them. We're going to do little maintenance on that. So we just click and drag it further. So we now put it as link cell, and also is a multiple, right? So this too is a link cell. So this is what we have. Now we are going to say, okay, what is the current asset? Our current asset is this. We're now going to say, okay, plus open bracket, if there's any previous depreciation, then multiply by maintainable capex. That's maintainable asset maintenance rate, right? So asset maintenance rate, just use the word rate there, asset maintenance ratio. So that is what we are going to say. We're going to say our current assets, the total asset we have, plus open bracket any previous depreciation multiplied by the maintainable assets. So it's going to give us that. So when you do that, so when you come here, right? Okay, this first, let's say this equals to this, right? So in this your new asset, what you're going to say is equals to this our current asset, right? Plus open bracket, do we have any previous depreciation? If you have any previous depreciation, then equals to, then and open bracket, that depreciation multiplied by the maintainable capex. Of course, because the maintainable assets at on the first year is going to be 0, that's why we are going to still have the same amount of the same asset. So once you do that, you click and drag it further, you have something like this. So when you do that, and now say put this in a calculation style, then here now you're going to say, remember, alt equals to the opening assets, right? The opening asset, summation of the opening asset, the opening balance, and the new asset minus the depreciation is going to give you this. So you click and drag it further. So you have this. Now let's build our depreciation schedule. So the first thing you're going to do is, what is the useful life of the asset? The useful life of the asset is 5 years, right? The useful life of the asset is 5 years. So when you put 5 years, it's a link cell. When you link this 5 years, right? Absolute reference, so that we can be able to drag it further, right? 5 years. Now, what is the year? We're now going to link our year. We're going to link the years, right? We're going to link the years. So this is what we are trying to do. We are trying to build a depreciation day. What we are trying to do it as a watermark depreciation schedule, right? So let's go ahead and say this. Now here we're going to say this is year again. So instead of typing this in one by one, there's a formula we can use. You can say equals to select how many years we have. 1, 2, 3, 4, 5 equals to transpose all this. Transpose meaning that we want to bring it back, we want to bring it into a vertical format instead of being in a horizontal format like this. So you can see what we did, that is transpose. Then this should also be left aligned, then bold this. Now what is the value of the asset? What is the value of the asset in the year 2025? The value of the asset in the year 2025 is what we're going to be looking at. Now the value is let me put a value that cannot change. Okay, the value is this is the value of the asset in the first year. So what we're going to do now, we're going to say equals to this divided by this, right? You can see this is what we have, that every year we're going to have this as our depreciation. So you can click and drag forward, right? But now see the problem. Remember that this is a straight line depreciation method that we're using. So what it means that at every year it should be able, what we are going to be deducting should be an equal payment at every year. So why is this value changing? Now see why it's changing. If you double click on it, you can see that it's instead of taking precedence from this amount, it's taking precedence from the previous year. But we should be taking we want to take precedent from, we want it to take precedent from the original cost of the asset. That's the original value. So remember what we did when we talk about absolute referencing and absolute referencing, right? So now we're going to lock, what we're going to lock here is we're going to now lock we're going to lock the row. We're going to lock the column so that it will take reference from the column direct, but it will still have the ability to change, right? So when you lock this, we have this, we have this, we have this, and we have this. So you can see that it's taking precedence directly from this, but every other thing is changing. Every other thing is changing. We can as well, instead of having this year spread like this here, we can as well delete this and put and say, okay, we want you to take reference from, this is absolute. Now this should be absolute, right? This should be absolute. As this particular number should be absolute. It is still going to give us the same thing. Now as the years goes by, what we are going to be doing is, okay, we say this, instead of doing this one by one, you can just copy it and paste here. something is wrong. Okay, because there's no value here. No, that one is not a problem. Copy this as well and paste here. Click and drag. Copy this as well and paste here. Click and drag and paste here. Then do this. So at the end we have total depreciation. Then total depreciation. This is the last schedule we are going to build before we start integration, and this is where you test you are going to test your feet, right? So I'm just trying to format the headers we have. So that is what I'm just trying to do. I'm not trying to do anything different than what you know. Well, I actually apologize if you are not familiar with Excel. I think it's the right time for you to start getting yourself familiar with it, because I assume that most of us has already known Excel to this point. But nevertheless, I will still find time to develop an Excel course for us to follow through. So you know what I did here. I just summed everything on this. I just summed everything and press enter. So I use my alt equals to give me that. Now we have gotten this. The reason why we are not seeing any value here is because there's nothing there. So when you now say equals to, normally I supposed to have used, let's say, transpose, but I don't know why anytime I try to use the transpose to transpose all these values that are here into this place, into vertical format, it always gives me an error message. I don't know why, but I have found another way to be doing it. Instead of wasting my time and doing that, I can equally say link this, link this, link this, link this. Am I linking the right thing? Yes, probably. So what is our depreciation for the first year? Our depreciation for the first year is this, right? So you can see the very moment we link the depreciation for the first year, there are changes that are made here. So you can click this and drag further. You can see everything is now populated. So you can see the waterfall depreciation, how it is flowing. So this is how to build a waterfall depreciation, and this is the last schedule we are going to build before we start integrating everything into our model. So now let's look at it. Let's look at it. Is there any difference with what we did here? We have this, we have 7, we have 7, 7, 4, we have 10, we have 13. Is that what we have? We have this, we have 7, we have 7, 7, we have 10, we have 13. So that means we are correct, right? So this is our depreciation schedule. So make sure you are saving your work. Make sure you're saving your work. So now let's just go through it and do some due diligence before we call this another end of a video. So if we look at it from there, from here we flow from calculating our pricing, calculating our quantity and our cost, calculating our quantity, calculating our revenue, calculating our cost. Then we also went ahead to calculate our salaries for the month. We also went ahead to calculate our operating expenses or operating costs, right? We have the total SG&A, selling and administrative expenses. So this is what we have, and we also went ahead to do all this, and we can go through them and check how it affects your model. You can see how we build all these assumptions, how we have integrated every assumption we have made in the input section. Now we are going to see how we are going to integrate it into our statement of profit or loss, right? So this is the last thing, that schedule we have to build, which is our capex. That's our depreciation schedule. Now in the next section we are going to be seeing how to integrate all this into our income statement right here, and we are going to see how to marry that or merge that or link that into our SFP and how it affects each of the three financial statements, right? And so if you have not subscribed again right now, right, this is another opportunity for you to do so, right? In the next session, like I said, we're going to see how to link all these things into our income statement, right? So thank you and see you in the next section. Don't forget, we are always here for you. Leave your comment, leave your concern, and we're going to address that. Thank you very much and see you in the next class.